quickly revisit where the markets are settling in at. And while for the index, it's a quiet day, but the futures have made it to that 24,700 plus level. Look at the big movers today. Reliance, by the way, is now up 2% in trade. So I haven't seen Reliance move up so much, frankly, in many months now. HAL is higher by 4.5%. Swiggy has moved up another 2.25%. PNB Housing for a second consecutive day, it's holding up in the green, 2% higher here as well. And then Manappuram, which is holding up 2% as we speak. So good going. DLF, Oberoi Realty, Oro Pharma, Hindalco, Power Grid, these are some of the underperformers in trade. But still, number crunching, and let's welcome on board another set. And we've got IKS Health, the management, Sachin K. Gupta, the founder and global CEO at IKS Health, joining in on the show right now. Sachin, hi, morning. Great to have you on ET Now. Sachin, despite acquisition-related costs, your EBITDA margins remain above 33%. The market is quite impressed with that. Tell me, what were the key levers? And do you think that you will continue to invest in growth initiatives going forward as well? And can those levers in place still support margin expansion?
Yes, thank you for having me on the show. Appreciate it. Yes, it's been a solid quarter, and as you saw on our 21% year-on-year growth, we were able to drive 24% growth in EBITDA margins, which continues to reflect the non-linearity. But in fact, the reality is if we take out the one-time exceptional acquisition costs, the EBITDA margins are even higher at about 35% and north of 30% year-on-year EBITDA margin growth. So yes, most of the levers around that have been the ones that we've been talking about, predominantly driven by reducing the human intervention through the technology, that proprietary tech that we continue to build, some enabled by generative AI, others through a combination of generative AI and rules-based AI and robotics process automation. And so I think, as I've continued to say, that we continue to have more gross margin leverage in the business that we will continue to demonstrate. Some of that gross margin will get consumed in SG&A investments, so might not reflect on the EBITDA. But generally speaking, this early to mid-30s EBITDA level is really the EBITDA level that we're comfortable with. And after the acquisition of TrueBridge, pro forma, obviously those margins will drop. But in the next couple of years, through the transformation of the TrueBridge operating model, we expect to bring the margins back into the early to mid-30s. So that's how it relates to margins. As it relates to growth, I think continue to believe that we have two distinct market segments. One is the traditional IKS market segment of large health systems, large medical groups. There, our growth aspiration continues to be north of 12% constant currency year on year, which means we'll continue to acquire market share. And then in the new rural and community market that we've acquired through TrueBridge, we're still trying to wrap our arms around what that growth could look like. And over a period of time, as we better understand that, we'll be able to better articulate what the overall growth could look like. But as you know, we've put out a True North EBITDA objective of 3,000 crores for the fiscal year FY30, compared to our current trailing 12 months for the June 30 quarter of about 1,148 crores. And so obviously contemplating a very significant growth curve from here over the next 5 odd years.
Hi Sachin, this is Harsh here. So how's the integration going with TrueBridge? At what point of time do you start to get confident of giving us a guidance with regard to the growth on the console level, including TrueBridge, and what TrueBridge adds to you broadly?
Yeah, so we're about 24 days into closing the transaction. So we're still in the very early stages of the integration process. But as I articulated earlier on the earnings call, we have our arms around it enough to continue to confirm that our True North FY30 EBITDA aspiration of 3,000 crores is the right aspiration. On revenue growth, I think we'll need at least another 2 to 3 quarters to be able to put our arms around exactly what the growth trends are in the rural market, what the impact of our unique health operating system for healthcare that we built, what the impact of that will be in that market, and hence what the growth trajectory would look like. So at least another 2 to 3 quarters, because we're obviously new to that market, and there's a bunch of transformation to do in the TrueBridge asset.
And Sachin, one thing is the integration and how clients will respond. The other thing is the platform itself, right? TrueBridge. Any changes to be made as part of this acquisition that you're making? And if so, what does that do? What are the kind of timelines that you're looking for in terms of the changes you're looking to make? Give us a sense.
Yeah, so I think there's two massive transformations that we are going to be doing for the TrueBridge platform. First is something that is going to stabilize the current customer base on the platform, which is low-hanging fruit that are pending features, requests from customers, backlog from customers that already exist, that we aspire to deliver in this fiscal year. That I think will have a stabilizing impact on the TrueBridge customer base. In parallel, we are launching the effort of what I call the rocket ship of the future. It's called Project Endeavor. And there we are going to be launching a separate endeavor about building an integrated system of action and system of record that becomes the TrueBridge platform of the future. Now, that's a good 18-24-month effort that will come out in phases. But the first step is over these next sort of 8 odd months of this fiscal, we bring stability to the customer base through the low-hanging fruit features that are currently backlogged, and that through that create a deeper trust in the customer base about the true larger transformation, which will be the only integrated system of record and system of action for US healthcare.
Interesting. So tell me then, where exactly is growth going to come in from in, say, the next 1 to 2 years? And what kind of numbers and projections would you want to give us if you were to stick your neck out?
Yeah, so we've never given guidance on growth other than the aspiration to grow faster than the market. I'll just continue to maintain that. But the levers of growth are very important. And the levers of growth really are, one, there is a very huge cross-sell opportunity of our system of action in the TrueBridge customer base. Remember, they are in 1,200 hospitals. Of the 2,100 rural and community hospitals, they're already in 1,200. North of 600 of those 1,200 already are on their EHR. Of those 600 hospitals, less than 200 are buying revenue cycle. So first lever of growth is sell our system of action on their 600 hospitals that they have, which are already their system of record customers or EHR customers. Second lever of growth is to cross-sell our system to the balance 600 that are their customers for other features of their platform. And then there's going to be opportunity to get further new hospitals in the rural and community market on our platform as well. So that provides 3 key levels of growth in the TrueBridge install base. And then we have solid levels of growth in our own traditional install base of large medical groups, large healthcare provider systems, where our new strategy of land and expand for large health systems has been demonstrated. For example, one of our largest customers, the top 5 health systems in the US, Advocate Health, a $30 billion plus system, has significantly expanded their relationship with us this quarter. And we're still only being able to help them to a fraction of the full wallet that they have. So I think tremendous growth levers in our traditional business that gives us the confidence that our aspiration of faster than market growth or faster than 12% constant currency growth is very viable there. And then 3 active levers of growth in the TrueBridge customer base, the results of which we still have to understand a bit better before I can say this is the percentage that it will result in. But I think tremendous growth levers on the top line side. And then on the margin side, obviously, we have even more confidence, which is why I've been able to give this True North objective of 3,000 crores in FY30.
Sachin, last piece, how is AI changing the business for you? I know that you have very deep penetration. There's also that regulatory moat of sorts, but you want to kind of give us a sense as to whether that moat has any risk of being eroded or your confidence in that moat?
Yeah, I think, look, I'll tell you, the biggest driver of acquiring TrueBridge was to build a sustainable AI moat. Remember, with TrueBridge, we have now received access to 5 million plus patient records of data that we can de-identify and start building, labeling and building linkages between the clinical context, actions taken, and outcomes to be driven. Through that, we create the AI training moat. With that AI training corpus, we are now going to start building our own SLMs that will reduce our dependency on the frontline LLM models. And as we do that, then that becomes a real proprietary moat, because those SLMs will not only drive and power the tasks, especially the non-deterministic tasks, but even the deterministic tasks in our TrueBridge install base, but also be extensible into our legacy large system install base. So the biggest driver of our TrueBridge acquisition is to build this AI training corpus that enables us to reduce dependency on frontline models by building our own SLMs, the journey for which has already begun. In addition to that, we are pioneering a new form of AI, which I think is the AI that healthcare needs, called explainable AI, because in healthcare, you don't just need AI to tell you what the answer is, but it needs to also explain how it arrived at that answer, given the criticality of the answer. And so we're, I think, pioneering this model of glass box or explainable AI, for which we're building knowledge graphs along with our SLMs that lead to that explainability. So explainable glass box AI through our proprietary SLM models enabled with human in the loop is being orchestrated in an integrated system of action and system of record is the new operating system for healthcare.
Quite interesting, Sachin. Glad that you could take time out and give us your color and vision on where IKS Health is headed next.
Thank you. Appreciate you having me on your show.